I think it was a respectable quarter. We saw, though, this difference between our rubber group, which was, I think, was very good performance top line and as well on the EBIT margin, which was achieved. And then the automotive group. And there, you mentioned already rightly, this chip shortage, which is affecting this part of our business heavily. The top line is limited because of a limited supply of chips and limited production of cars. There are extra costs in special freight. There is extra cost in a production which is much more volatile just to adjust to all these shortage and non-shortage situation. And there are price increases in raw materials and chips. And by the way, those we see as well in the rubber group.
Yeah, it's interesting though. I mean, I'm just trying to understand for today's investor, what's the new piece of information? Because I think a lot of this was well signaled by you and the business, and any investor will have seen this story floating around for most of this year. Is it really going to be so challenging for the third and fourth quarter, given, as you've pointed out, the net line for the autos division will still be similar to guidance, and the margin may take a little bit of a hit, but actually visibility on that seems to be quite limited?
Well, this is true, and this is probably one reason for the reaction. Visibility is still not as strong as we like it to be. We saw just in Asia the COVID situation in some countries where again many chip producers has put another limit on the availability in chips, and so we are moving on. And really the good news, which says, well, there is now the point where the chip shortage is over and we move back to a normal business. This point is not yet to be seen. We expect it to continue in 2022, and this uncertainty never is something which investors like to see.
Wolfgang, what were you assuming for raw material price inflation for the rest of the year and even into 2022? And to what extent can we expect you to pass on higher raw material costs to your customers?
Well, to concentrate on the rubber group with this answer, we see about 500 million of headwinds in raw materials in 2021. And the majority of that will be in the second quarter. Raw materials have started rising end of last year, and now we see the effect in our P&L. The answer is not the same for each of the different product groups. How do we see further price development? On natural rubber, it seems to be more on a sideways development after a strong increase in the last last 2 quarters. On the synthetic rubber, it is different. Carbon black, again, different. Steel cord, again, different. So there are already areas where we think we have seen the peak, and other areas which might still see some increase before we come to a peak.